So this is the 19 August to 23 August video. Biggest change here is I have decreased the number of stocks per day, but I have picked two stocks which to do a bit more of a deep dive on. In this case, it's Estee Lauder and Cava. Now for Monday, we got Estee Lauder, Fabrinet, Palo Alto. None of these are very easy for this particular earnings period. But Estee Lauder is an important stock we're going to talk about because Estee Lauder is a great entry stock. Does that mean this stock is going to pop up in earnings? Impossible to say, just because the China market's weaker right now. Good chance the stock still loses 10% on Monday if the Chinese numbers are just too bad. But they are increasing revenue in the very important Middle Eastern market, Europe, and the United States. So their story is flip-flopping from pretty rough 3 years to getting back on track. I really want to make sure these videos have a lot of long-term stocks in here, a stock that you can buy right now and hold a year from now. Estee Lauder, great example of that. You buy Estee Lauder today, you hold Estee Lauder until 2026, good chance you double your money. So that's easy, that's nice, even if they miss earnings. Their forward PE is very sneaky, and the thing about forward PEs, you have to have the PE ratio relative to the sector. So I put a lot of stuff on here, but a lot of stuff you need to research yourself on because every single sector is different. Believe it or not, at a 42.5, Estee Lauder still actually has a fairly rich valuation. Not too rich, still overall it's undervalued for that it as a company. But it's over the actual average PE for that industry, which is more like 22-ish. So that's important to remember, okay? The sector is important. Now what helps it out is they do a good job having pretty conservative earnings estimates. 100% for the last 4, which means they always seem to beat what they say they're going to minimum make. That's important. If you really want to see Estee Lauder crash, have them miss their forecast. Likewise, the PS ratio is very important because it's showing it's still very undervalued when it comes to actual revenue. Lastly, pretty good little dividend yield. 2.78% is a nice dividend for you who buy the stock right now and perhaps you sell the stock 2-3 years from now. Very good for a long-term investor. That's why it's in bold right now. It's tricky. The balance sheet's a little tricky. They have roughly $5.5 billion in overall liabilities, which isn't great. But they do have a pretty strong free cash flow and a good plan to tackle that debt. A couple other stocks here. Fabrinet, I really don't care about Fabrinet. This is one of the bigger companies as far as overall market cap, but it's still a fairly small company, 8.3 market cap. Palo Alto is tricky right now. Okay, I like Palo Alto as a trading stock. Love it. I mean, I've done pretty well with Palo Alto as a trading stock, but it's done pretty well lately. Just came off a nice week. I like stealing Palo Alto shares below $300 per share normally. Now, I can see Palo Alto roaring on Monday because of CrowdStrike. So, the thing about CrowdStrike screwing up is I wouldn't be surprised on the earnings call if a lot of former CrowdStrike customers say, hey, I can't trust CrowdStrike for my IT needs. Palo Alto it is. That's sneaky. But it's kind of hard for me to want to buy it before earnings. I'm very interested in Palo Alto. I would argue Palo Alto is the most important stock of this week, but I don't want to buy it right now. I actually sold a little bit of recently, so it's a tricky one. That is a Pelosi stock, though. Homegirl's got a lot of that. And if you want just a long-term stock, Palo Alto is fine right now, even at this price. Great company. But I'd prefer a cheaper entry point for Palo Alto. Now, Estee Lauder again. This is the breakdowns for both the 1 month and I did a 5 year. So I like the actual breakdowns with Morgan Stanley better. Now Morgan Stanley owns E-Trade, so it's E-Trade, and I'm saying that because the bottom of the charts actually have pretty good little breakdowns. It's easy to read. I could have made these bigger, so next time I'll make the charts bigger. But you can see, hey, your basic 5 year lows for Estee Lauder. Now, Estee Lauder is a pretty heavy name stock, as we're going to go on the next slide. It's really hard to read this, unfortunately, but the left one has RSI, which is relative strength indicator. Now, if a stock is very close to that magic number of 30 for the RSI, it's a undervalued stock. So right now, it's very close to it. That's why it's a pretty good buy. Likewise, with RSI, if you see the stock 60 or above, danger. Think danger, because it's a overvalued stock. Now, MACD is mostly a measure of momentum shifts. So, once again, I should have made these charts bigger, but the MACD histogram had a nice reversal last week. So, and consequently, pretty strong week. You want to see MACD histograms if you're doing short-term trading continuously have green upward actual bars. When they're consistently going down every single day, that's not so good. Oftentimes, the best time to buy is actually what's called a MACD histogram reversal, which is when, even if it's an overall, the histogram is in the red, it's projecting upwards. Cooking Investments has entire lessons on technicals, and I will make a video I'll probably make a video strictly on MACD histogram, a video strictly on RSI. These are very useful tools for giving you a good idea of when to enter and when to leave a stock. Technical analysis is all about entries and departure points. This is why you buy Nike, and this is why you buy Estee Lauder, because they command best in the market branding. Estee Lauder being different, where Nike is really just Nike itself. Estee Lauder owns all these different companies. So all these, and plus a bunch more, are Estee Lauder brands. Very, very well famous, strong branding. Now, this is a market that is like 2022 fall for tech. So the consumer stocks, the Nikes, the Estee Lauders, the Starbucks, they are all down a lot. Which is why, for you longs, it is a juicy time to buy these guys. If you just want to buy a stock and hold it for years, you will rarely find an opportunity as juicy as you have right now with a stock like Estee Lauder. So that's important. Beautiful. Now, this is very big, where there's a possibility tomorrow can be a massive pop in earnings. Because if they had a 6% year-over-year increase in revenue, even though China's been shitty, that would really help them with getting their stock price going back up. So we'll see. It's very hard to say. It's hard to say what's going to happen with Monday, which is why pinpointing the absolute bottoms of stocks is a fool's game. That's why usually for both shorts I do, unless it's very, very, very short, like just for a day or two, or I'm gonna hold a stock for days, weeks, months, years, dollar cost averaging. You don't know the exact bottom, so if you're so hungry for the exact bottom of Estee Lauder, good chance you miss out on a lot of upward price action, which is bad. So just right now, the average year-over-year stock price by the Monkey Analyst is $133. So just that's 40% upside. Pretty good. Gonna beat your, I don't call them stupid, but gonna beat your like S&P 500 SPY fund. Tuesday, Tuesday's tricky. A lot of tricky stuff this week. And that's why a lot of these I don't really have concrete answers as far as what we'll be doing. Lowe's is tricky because I told you already, if one stock misbehaves, it affects other stocks. Home Depot had pretty weak earnings last week. It's really hard to believe Lowe's is going to have great earnings after Home Depot had poor earnings. They weren't terrible. The stock price didn't go down that much, but it just stayed really flat. So it's hard for me to want to do anything. I don't know if I even want to short it. That's why the Silence plays are wonderful. They're great. It is very good to be patient. So Lowe's, hard to say. Really hard to say. Navius Maritime, also probably a Silence play. Where the P ratio there was like so undervalued. I mean, price to sales of 1.1. Now it's funny, so this is where the individual sectors matter a lot. Looking at the maritime shipping, the P ratios are almost all single digits for that industry. So once again, the sector matters for the P ratio. If you cannot compare a maritime shipping company to even a Lowe's, okay, can't do it. Very different. They're both largely value stocks, but you can't compare the two. I like this company though. They do a pretty good job, and this 3.2 is wild. Like, yes, the industry is all single digits, but this is just crazy cheap. And beautiful thing here is they usually beat on earnings, so that's nice. Lowe's, little risky, okay? They've tied in earnings twice over the last 4 quarters. You don't know what they're exactly going to do. And it's still a tricky time for this particular earnings period because the market's got a lot of negatives. Who knows if we're having a recession? We still have a lot of pre-recessionary indicators out there. Toll Brothers, very hard. Now, I going on the theory of slowly wrapping up a short. I have a very tiny short position on Toll Brothers right now. Now, good chance Toll Brothers goes up this week. I don't really care. And I kind of hope it does. I'd much rather make Toll Brothers into a bigger short in the event that Toll Brothers has a blow off cap. Or when they actually say, hey, we're going to actually need to build less houses. So once we get to the point where the housing market slows down, that's when it's going to start printing. Toll Brothers, Delta Airlines, even the Lowe's, these are all very cyclical stocks. Overall, the home builders have done very, very well this year. But a stock does not go up forever. That's why I like building even longer term shorts. Now for Wednesday, you got Target. I like Target here. I'm going to buy some Target this week. Walmart just reported very good earnings, but it's deceptive for Target because oftentimes the two do not correlate very well. Where Target will do better when the market's hot, and Walmart will do very, very well when people are poor. So that being said, once again, hard to time bottoms, pretty good value. I'm fine paying a 15.4 PE. It's solid. And then once again, if I'm gonna hold something, I want at least some dividends, okay? So, maybe you have to hold it for a couple quarters, but you get the dividend. It's fine. Life's good. Other two, purely sideline plays. Put Snowflake on here because how the mighty have fallen is a good saying. Once upon a time, this stock would actually compete with Palantir. Not the case. I mean, terrible valuation. And good chance this goes to the NA category because you have an NA or negative P ratio if you aren't actually making money. You need to make money. Positive earnings per share. So this company is not great. But why it's not on the short list is because the stock itself has been beaten down. So be very careful of beating down stocks. And I do believe of the indices, this last part of 2024, is going to see the best performance for the Russells. Russell 2000, those kind of stocks. Snowflake is definitely a Russell stock. So if you're a Russell stock, a little nervous to bet against you, even if you're not doing that well. Thursday. Okay. Thursday has a couple important players here. Advanced Auto Parts. This is a company that proves why anecdotal evidence is not very useful. I go to Advanced Auto Parts. Okay, go to Advanced Auto Parts, get some oil for the 911. Literally, that's what I do. But that doesn't mean it's a good company. Okay. Now, on paper, fairly low PE. But look at this. That's what I underlined. For the last 4 quarters, they have not beat earnings once. Okay, they haven't. The chart is terrible. So you can't buy a company like this. Even if they seem to be going back on the up track, you can't do it yet. You have to watch after earnings. Risk management is important because yes, tying bottoms is impossible, but if a company keeps doing poorly, that's bad. And this is why this is important too. Very high PS ratio, okay? So not making that much money. So even if it's funny with this company, go to an Advanced Auto Parts or go to like a Dollar Tree. You can see like one guy working there, okay? Advanced Auto Parts, I think I saw 2 guys working there. So even if you don't make much money, you can make up for it by having skeleton crews. So that's kind of his model. We have a tiny little dividend, but no interest really. Cava, oh, I love this short. Love it. Now, the company, even if you bought Cava today, you hold it for 2 or 3 years, probably make some money. But I'm going to go into why Cava is a very dangerous buy and very good for a short, especially coming into September. September is the worst month for the stock market, historically. So I like to have some shorts going into September, especially a stock that has been extremely overbought this year. I mean, 580 PE. I mean, like some of this stuff you don't need to actually go into like, oh, what's the average PE for the sector? When you see 580, you know that's not the average. That is by far the highest P ratio possible. Intuit is kind of similar in the sense that it seems overvalued to me, but they're hard stocks to bet against because very sticky. QuickBooks, TurboTax. If you use those services, good chance you don't get rid of them. They're annual, kind of hard to bet against. I'd be tempted to maybe short this, but really hard to bet against. Workday, I want to buy. So Workday, good buy. It is one of the top 5 congressional insider stocks right now. Undervalued. It did pop up a lot the last 2 weeks. I wasn't paying attention to it, so it's not as good as buy as it was, but it's still a fine little buy. So Workday, especially going to earnings. The whole world uses this now. This is the annoying company that makes you input your information several additional times when you apply for a job. So that's Workday. Now in Cava, okay, the monkeys do not provide a ton of value for us because they are often wrong on price targets. But when a group of monkeys, analysts, are collectively together, it helps a lot more. So if the top price target for your stock is just a couple points above what it currently is, that is a risky stock. Blow off top stock. Then chart patterns. I don't talk about chart patterns that much, and I won't on this channel because they're very hard to predict. But when you think of an actual chart pattern, it provides you some ammo for what could happen. I can definitely see Cava going up a little bit more and then dropping down. Then having a shoulder right here and dropping down some more. Classic head and shoulders pattern. Very dangerous. Now Cava here, going into some cases here, I think it's fine long term still. I do. 30% revenue gain, pretty good. And they're very ambitious. So last fiscal year, 72 new Cavas, pretty good. Now, 52 for this fiscal year. They want to have 1,000 different restaurants by 2032. Now, Cava, for those who are not aware, kind of Mediterranean feel, a lot of bowls, a lot of wraps, a little healthier and a lot of other options. They did have a quarter where they made money. That's good. So went from 9.3 million, which is good. That was the last quarter. The year before that was a 2.3 million dollar loss. So you want to make money. That's pretty good. But here's the problem. You do well, your business improves. But if your business skyrockets in stock price too quickly, you need a perfect, absolute perfect earnings, or the stock price is going to go down. That's why it's a good short going to earnings and a month, September, which is risky. So good chance, even if Kava goes up a little more, you short more of it, then watch it go down. The bear case is risky because cool, you're making more money, but your same stores just had a 2.3% growth versus Chipotle's 11.1. This is a problem. This is a problem for you. Inflation's a big issue too. People are not having enough money. That's why it's still some risk with even a stock like Starbucks again, where it could still go down. Now, the biggest thing though is just valuation. It's just crazy numbers. Crazy numbers lead to pain. Celsius is a good example of this. Celsius stock had numbers just like this at one point. Very popular beverage company. Look at the Celsius chart now. It's in the depths of hell. So your stock runs up, but if it runs up too much, the best play is a short. Friday. Take a break. Just enjoy life. You don't need to focus on trading every day, or trade if you want to, but there aren't any crazy events happening on the earnings Friday. It's worth mentioning that Friday is going to have Jay Powell talk, so you never know. You actually have Fed minutes on Wednesday, so that could be an issue. And then you have Powell talking on Friday, so who knows? That's a big deal. So if Powell does say we're for sure getting an actual cut for not earnings, but for interest rates, stocks gonna roar probably. So that is your Friday. Have a good one.